Good afternoon, everyone. BC Richfield here, coming to you live from London. It has just gone midday UTC. Big shout out to everybody joining the stream live today. Bern, Tino, a few of you other legends in here as well. As always, super appreciated for your time. And also to everybody that's going to be watching this on recording. So today, we're going to take a look at Bitcoin. We're going to take a look at ES. We're going to take a little look at the DXY and how that can kind of play into our Forex picks. The other thing that I wanted to do with you guys today was either take some chart requests towards the end for crypto, so some altcoins and bits and pieces, or for those of you that are interested, I know I mainly cover crypto on these streams, but can absolutely happily take a look at some Forex as well. So if you've got any suggestions like that towards the end, do let me know and pop them in the channel. Also, guys, if there's any issue with the sound or the visuals, if there's any lag or anything, do please let me know. So where are we? So we're here with the annotations that we've got on the chart from Monday. So I know this is going to get a little bit messy as we zoom out here, guys, but let's just take a quick look at this top down. There's also another level that I've been finding really interesting, which is this orange line, and I want to show you exactly where I've derived that from. So let's pop this on full screen and zoom this in so you guys can see a bit clearly. Now, what we've done on this one is we've gone with a nice thick red lines to annotate our key weekly points of interest. All right, this is where we expect there to be liquidity resting, right? Stops resting above these, so we know that they can quite often provide good reversal points. It also gives us a good idea as we zoom out onto the weekly as well, looking at our structure, right? Because something that obviously I don't really keep on the charts too often, because by the time you zoom in, it takes over the entire chart. But if we're looking at this gap here, this inefficiency, this fair value gap, however you want to call it, then in my mind, that's really what's kind of drawing price higher here. But we have been seeing a lot of weakness from Bitcoin, which is to be expected in truth. We have to kind of take the macro picture into consideration here with inflation, with interest rates soaring, cost of living getting a lot more expensive. The best way to think about it is, where are people getting this disposable income now to be speculative with, right? And they're just not, it's just not sitting around, right? But it doesn't mean that we're not going to get these pumps, these relief rallies. And obviously with it at the moment, as it is very news driven market, okay? But we just want to know where our levels are. We want to pay attention to those levels, okay? This 16,202 is a really key level. Let me zoom back for you so we can see. Morning, Renee. Thanks for joining, buddy. So this is, I've just got this marked out because it's the bottom of this consolidation, right? Now, very, very thin candle here with hardly any volume in that, right? A very small body. But we paid attention to this here, and we can see, if I just zoom back a little bit, that when we were looking at the top of this here, let me just draw this in for you guys so you can see it. Okay, and I made that a little bit thicker, actually. There we go. We can see as we came into this here, resistance, support, flipped it, came back over, right? So we deviated this level at that point, and then this huge sell-off, right? Where have we sold off into? The bottom of this consolidation here, all right? So make that thicker as well so we can see that. Now we can see here, although we're wicking below, well, that's absolutely fine. We're not closing any of these bodies under there, so there's no significant volume closing below that level. So at the moment, that is holding, okay? The other area that we've got lined up is this consolidation here from this area before this huge breakout, all right, that wasn't retested. So if we were to get, I don't want to say the worst case scenario, but I do want to say, not a great one, obviously, if you're into your crypto, which is to come back underneath here, get some kind of retest or certainly a weekly close, then I really do think that this is going to be the main draw on price lower. C-Ron. Hey, buddy, good to have you back. 2023 is going to be a good one. It is, mate. It is. We're going to work really, really freaking hard. And a lot of people are going to change their lives this year. I came up learning many moons ago in a significant bear market. And I think it helped me a lot, actually, understand market dynamics. I think sometimes when you get involved in the bull runs, you can get lucky. You can get lucky quite a lot, and that's not a criticism of people, but it's very, very unfortunate for your trading careers if it happens, because you end up pressing rinse and repeat. I did it in my early days as well, especially in the early bull runs, and got too cocky and overinvested, bought, and completely ignored what were really clear signs for the blow off tops that we got. So bear market's brilliant for building, brilliant for refining your skills, great for learning, and provide you with plenty of opportunities, right? So On a weekly scale, this is where we are. Key liquidity above here. Why? Because these are the key swing highs for me. What makes them a swing high? Middle candle flanked by lower highs, or a swing low is the lowest middle candle flanked by higher lows. All right, so simple kind of triangle pattern. Now, is there anything else of significance here? We've got our two key levels here, this black line, which we're going to delete now because we're just showing that in terms of historical levels. Now, the other thing that I like to look at is what's capping the market, right? So what we've got here that we can see quite clearly is we've got some equal lows, right? So let's mark them on quickly. Now, I know this is historical, and I will get up to speed. Not EQ, is it, idiot? Equal lows. Here we go. So when we've got this and we've got this level, what was interesting for me about this, where we've got these equal lows, is when price came back up into this area, what had acted as very strong support had now flipped to resistance. All right. So that gives us an idea and a target. Now I'm going to remove this because we've got this liquidity up here. And as we drive down into the lower time frames, we can look at things like our order blocks, key areas, fair value gaps, reasons we think price can get drawn higher or lower. But on a weekly scale, what's my current thinking? Well, I've been a little bit more bullish than bearish on a short-term scale. And let me tell you why, before we drop down into this, all right? Nip Par, hey buddy, Happy New Year to you too. T and Sani's at the ready. Good man. In fact, you've reminded me very well there, Nip. Let me just pour my brew out. I don't know if any of you are keen tea drinkers. I love a bit of tea, and my go-to is Yorkshire tea. Yorkshire tea with a little bit of whole milk, no sugar. You probably can't get more quintessentially British than that. Right? Good to see you, bud. So, what am I looking at here? All right. I'm looking at these. I'm looking at these highs and lows, right? Now, I don't want to jump into trades blindly. I want to wait for price to come into my level, and then I start to get interested. So at the moment, we're in a little bit of no man's land here on a weekly scale, because when we look at it, right, here's our high, here's our low. This is our inside bar. Yeah, this is our mother bar. This is our inside bar. And we've not interacted with either of these yet, right? So this isn't telling us too much. So a really good question. Why would I be more bullish than bearish? Purely because of how we've taken liquidity, right? So once again, let me clean some of this stuff up, some of this crap off here. Right, get rid of that. Now, this, what we're looking at here, I'm looking at lows. And what I'm saying to myself is, let's look at the reaction we get when we run certain highs and lows, right? So let me just hide these drawings for a second and show you this, right? Now, I won't annotate the chart, or all the drawings are going to pop back on. Partial daily. You legend. That's really cracked me up. Just like the powder BC, it takes my headaches away. Clearly a snowboard or ski enthusiast. Awesome. Guys have been struggling across Europe for powder at the moment, but really good to have you on the stream, buddy. Thank you. And Happy New Year to you as well, Punit. Thank you very much for your kind words, buddy. Really feeling the love at the moment, feeling a lot of people looking to turn this year around and kind of get over last year. Whether it was a good or bad year for you, obviously it wasn't a great year for the crypto space. So let's do everything we can to make this a positive year, yeah? But remember, we're traders, right? We trade this up and down. We leave our, not our bias, but we leave our kind of unconfirmed bias or our personal attachments at the door. Just if we're big on Bitcoin, you're big on Litecoin, you're big on other coins, Solana, etc., doesn't mean that these things won't get trashed. With the economic conditions being as they are, right? So we want to trade the charts. When the times get ready, we'll be ready to pull the trigger on our investment portfolio, all right? So what am I going on about? Highs and lows, right? Highs and lows, key. Vatsel, Happy New Year, buddy. So I'm just looking really on a weekly scale, then the daily scale, then the 4 hour, the 1 hour, the 15 minute, the 5 minute, and executing 5 minute and down. I'm looking for the same things. I'm looking for liquidity grabs, right? So let's pay attention for a second to this high, right? What happened when this weekly high was taken here, right? We can see how it acted as resistance. Why? And still does, in fact. We draw a line across here. If I hold the cursor there, we can see here, here, and here, all failures to close above this level. For me, that's what's capping the market at this point. Right? We need a strong close above here to make progress further up. So when this level gets run, you see this reaction, this pullback, right? Now, same thing happens here. If I leave my cursor there, right, you can see on here what happens. This level gets run, we get this corrective move, right? And the same with this one. This one even more so because we've got these relative equal highs. We get this big move up. That is going to trap a lot of people, right? Think about this, and people that phrase it really, really well that I respect. I've been introduced to the guy recently through SZ, which is Trader Dante, and he frames it beautifully. But SMFX as well, a really good guy I've come to know in the space, and Aussie says it as well. Basically, think of where people are really screwed and where you can cause the most damage, right? So who's offside here? Breakout traders breaking out above these highs are getting involved, longing, expecting this thing to go up, right? Because we've been in this consolidation for a while. What else is resting above here are stop losses, right? So people that were short from here naturally put your stop above the swing highs, right? Well, what is your stop loss become if you're short? It becomes a buy order, a market buy order, which is going to flood the market with liquidity, right? Now, for us, for lay people, for retail, we're thinking, okay, great. Well, that makes sense, right? There's buy orders there. Buy orders get filled. Market goes up. No. If you're a big account, if you're a whale, if you're smart money, as ICT would refer to it, then what you're doing is you're driving people up into here to create this liquidity. Because let's say you've got hundreds of millions, right? Billions, whatever, large sums of money that you want to short, right? Now, you've got some clear targets here. You've got some lows and bits and pieces. But in reality, you don't really want to be getting involved here, and you don't want to be encouraging everyone else to get involved here, because you're going to get slippage and your orders are going to get messed up all over the place, right? And then they're just going to, they're not going to get the fills that they want to get, and the risk to reward isn't there. So if you want to sell a lot of stuff, what do you need? You need buyers, right? So what do you want to do? You want to induce buying, yeah? So you get the market up here, you flood the market up, right? And then you want to mitigate it. You want to get people trapped up here. You want to get them in the hurt, and then you want to trade it down, right? Most commonly, yeah, we go down to prior days highs and lows. All right, so people can get involved here. Price comes back down. Trap. People are down here underwater, forced to close their positions. Right, market floods with orders. Helps this momentum travel lower. Okay, so key highs and lows. So without that waffling on too long, why does that play into me feeling a little bit more bullish than bearish at the moment? Because we've had this liquidity sweep here, but the market's corrected. Now when the market's corrected, we've taken the liquidity from these lows, continue to drive down. But now we've taken liquidity from here, right? Notice how we're holding this. So look, when we took this liquidity here, right, from this low, which is fine, we took that there, had a small reaction, right? And then we set this low, and then price comes in. But that low here, this body closes below. This low here, yeah, is really clean, and it's supporting price. So for me, the most recent move, or not for me, the fact of the matter is that the most recent move has been a liquidity grab to the downside, right? So that means this. That means that on a weekly scale, right, that was the move. Here. Taken liquidity from the lows, we've driven into this order block here, which we'll look at on a lower time frame, right? And now price is searching for liquidity higher. So this will make things look a little bit less complicated. Now, I kept these on here because these are the annotations that we had from Monday's stream. I thought actually probably do you guys a favor if I'm not just marking the chart up from blank every time. But if it is something you want to see, let me know. We can delete this and go from the top down. But again, we're looking at the red lines. Nothing's changed here. Red lines are our weekly levels. All right. Blue lines are our daily levels. I'm going to make this a bit thinner again so it's not so obtrusive. Now, this is our fair value gap here on a daily scale, right? This is what's teasing price higher, just teasing it up. Dan P, yes, absolutely. Yorkshire tea is the one. Boy knows his tea. And Imran Khan, good man, good to have you on the stream. So we're pulling up into here, right? We're coming up into this inefficiency, fair value gap, whatever you want to call it. I'm going to get onto this orange line in a moment because it's something that is of interest and something I don't often cover with you guys because I try not to make these streams too convoluted or too kind of heavy with kind of different points of information. I try to keep it nice and clean to just try and kind of bring people into the way that I think about these markets, all right? So, daily scale. Remembering that the start of this week, right, we've got Monday here. We start the week with an inside bar. We've got our mother bar here, our inside bar here, Remember, mother bar, inside bar. Now, this is called the inside bar pattern, these two candles, and it's when you have a larger candle like this, where the second candle in a row, has to be the consecutive candle, closes its high and low within the range of this. All right. So if we want to look very quickly just for other examples of this, right, you can see, let's have a look here. This one, right? So mother bar, inside bar. Can we see this? Now, how do we trade this? Well, we've already got the mother bar low written up, the mother bar high, which is here. Yeah. We trade it like a range. Price comes on, we expect liquidity above here. Price closes back in the range. What do? We trade it down, and we trade it down, first of all, to the 50%, which we can see we tagged in here. Then when we see this bullish reaction, gives us a chance to kind of cash out of those positions. TA23, good day right back at you, buddy. So just giving that for a little bit of context. So that's where we were here, right? Now, let's see on our daily inside bar how we reacted. We first of all took out the inside bar, which is this one. We closed above it, so we expect expansion higher to the mother bar. We got that. This is kind of what we're looking for, really. We want the day to open, come down, allow us to get some fills before it then moves on to attack the prior day's high. We didn't get the prior day's high on that day, but we can see here again, day opens, trades down a little bit, expands higher, and takes out liquidity above these two highs. So my natural expectation now is to kind of come up to here, right? To take out the liquidity above these highs. Just a quick question from C-Ron. If you use a smart money concept indicator, Lux Algo, does that give you the same or similar levels you're working with? To be honest, mate, I've not used the Lux Algo. I'm not actually overly aware of it. What I would say, though, is typically with these kind of things, you don't, and it's not to discredit indicators. I think indicators, I'm very much a student of ICT, have been for many, many years, but I also study a lot of concepts in and around that. I know a lot of people very much ICT purists, and I massively respect that. I know people that have made a lot of money. I've made considerable success with those techniques as well. But I also like trading support resistance and other bits and pieces that become a bit convoluted with his teachings, But I would absolutely recommend everybody study ICT, right? He's just started a new mentorship. I'd recommend you go back and look at least the core 2022 mentorship. But a very different way of thinking, but very much for me, the formation of a lot of my price action understanding that, and obviously Trader SC as well, who's been absolutely massive. But what I would say is you don't need that to kind of spot these things, right? These levels and bits and pieces that we're looking at. What we're doing is, and we'll do this on a fresh chart with a fresh asset shortly, but I'll show you how we take things from a weekly down to a daily, 4-hour, hourly, 15-minute. And then basically we're just looking at these key levels and we're telling the story of price. So what we've done on the weekly is we've said, okay, week started here, right, with this after this candle. And we've said to ourselves that we've got this bullish bias in mind. Why? Because on a weekly scale, right, it makes more sense to me that after taking out this liquidity down here, price has failed to take liquidity above the highs here. Now, when we're in a bearish order flow, you'll often see that the lows get taken, but the highs don't. But we'd be looking for that with a bit more consistency, right? So for me on a weekly scale, I'm saying, right, well, if we look at every time, take out this low here, we get a reaction, right? We take out this high here, we get a reaction. Now, when we're talking about actual swing highs and lows, right, which obviously we drop to on the lower time frames, that's when it becomes even more relevant. But what we want to be studying here, right, is saying to ourselves, okay, well, if we've taken liquidity from down here, it feels natural to me that if the market's in balance, it's now going to seek liquidity on the opposite side, right? So we've taken liquidity from the lows here, right? Price has had this nice reaction coming back in. We've taken in this low time frame order block. Now we're saying, okay, have we taken these highs, this high, or this? So this one when that closes next week. If we haven't taken that, then we're looking for a raid on these. If not, at the moment, I feel like we come up to these daily levels. So now we drop onto a daily. We're just doing exactly the same, right? We're looking on a daily, and I'm focused on the daily now on swing highs and swing lows. So remember, this is a swing high because it's flanked by two lower highs. Lower high, lower high. Main high gives us our swing high. Think of it like a kind of, think of it like a V shape, yeah? So think of it as price going up, yeah, and down. So this candle, this wick here, is going to be flanked by two lower wicks there and there. And obviously the opposite for your swing low. So this swing low here, for example, is flanked by two higher lows, right? So therefore, when price ran that level, we can see here the reaction it had. It's taken the liquidity from there, trapped some traders, and now it's come back the other way. It's often liquidity games with this type of trading, right? Because you've got very, very large accounts moving money around and they need fills at certain levels. And the daily chart is our bread and butter. The weekly kind of sets our idea in motion. The daily chart helps us refine it. So we can see here that we've got this liquidity sweep of the lows. Now on a daily scale, obviously things become a little bit more complex because we can see here that we had this high here, right? Now that is a swing high, yeah? So again, same principle, flanked by lower highs. So price has come down, but let's look at structure. Low, high, yeah? Higher, low, lower, high, right? Now we come down and make a lower low, right? Lower high, lower low. Well, we've now taken out that high, right? So we're in the start of making a bullish market structure on the daily. Yeah, we would want to see price come back down here, get some support probably off the top of this range here, this blue line, and then we could look to move higher. However, we have to be aware of this, right? Because now as we drop down onto the lower time frames, this is definitely significant, right? It's coming into a swing high. But let's not forget that we've still got a bullish market structure, right? Or a bullish, bias from our weekly chart. So at the moment, we're expecting an attack on this. Now, this orange line starts to come into play on the lower time frames, and I'm going to show you why. So let's have a look. Rail Pow, is that you, mate? Just kidding. It is, mate. It is a London accent. You're very, very right. Or London, Essex-ish kind of outskirts. Probably talking myself up a bit more there. Just a lot of experience living in both, but that did make me chuckle. Good lad. Right, so 4-hour chart. Here we are. So, remind me as well, I want to touch on something about range trading with you guys as well. I've been getting a lot of messages and emails and bits and pieces about that. So, let me just make a note of that and we'll cover that off at the end. So here we are, this level. Now, what makes me think that this could be pushing up higher? So this was our level, this blue line. It's the way that price has moved through it, right? Price has moved through that with a lot of impulse, right? Powerful move through. Normally a good sign that the market's ready to move higher. However, something we want to be aware of are inefficiencies, right? Let me just color this something different so it stands out a bit more. I'll go with purple. Right? So often the market wants to rebalance, right? And you notice when you get these gaps, like we got here, for example, here to here, price moves away from it, comes back down into it, yeah, and then goes on about its business. These gaps are almost always filled, but we don't know over what time period. Some gaps can take months, years to fill, all right? Henceforth, what we're looking at on the long time frame charts with Bitcoin at the moment, and why a lot of people, myself included, have that kind of 12K area in mind should we lose the current support. Now, this is on my mind, right? We've had an impulsive move through this level. We've got clear liquidity above here higher, right? Is there enough in here if we pull back into this area a little bit? If we find support on here, yeah, or we dip down into this area a little bit and then start to break market structure to the upside, is there enough in here? Probably just about. You really want about 1%, really, if you want some good kind of day trading targets. So if we get that pullback to that level, there's potential scalp into these highs. All right. But let me show you why we've got this orange line on the chart today. And I know the charts look really, really messy. Typically, I leave a lot of these lines off, right? But I just want to, and a lot of people ask about what they would do if they were learning, right? How they would do the charts. And I know I just annotate mine up in black and white, but I think having these in these colors really helps people get an understanding that these are our weekly levels, these are our daily levels. More weight is given to the higher time frames, okay? So this is why I'm looking at this level, right? So how did I come up with this level? So when I'm looking at a chart, I'm always asking myself the question, what's capping the market, right? Now, obviously you've got your extremes, your wicks, right? We don't know what's going to happen beyond there. What our assumption is that there's liquidity there, right? Or that there's, there's the chance that we're going to get a reversal here, or if we get above it, hold and move higher, right, then, we've got a clear play, haven't we? We come up above a level like this, we come back down below it, we've got opportunities here, right? Or vice versa, if we get back above this level, normally we want to see a big impulse move up. We want to see a bit of time as price comes back down to retest, right? Then we can say to ourselves, okay, we monitor this here, and what we ideally want to see is a pattern like this, right? And this is showing us that, and think of this as a zoomed in version of when we're interacting with that line, right? We want to see a low, we want to see a purge of that low, right, to take that liquidity. Then we want to see price come up, close above this high. That's the high that's taken the low. When we close above this high, then we're looking for entries along this line here, or anywhere in here that there might be an inefficiency or a fair value gap, all right? So that's what we're looking at when we get to the levels. Now we're here, right? The other question I'm asking myself is, well, what consistent levels of support and resistance have we got? And for that, you're often a lot better looking at the bodies, right, rather than the wicks. The wicks are where price has tried to get to. The body is where price has actually traded, right? So you've got the volume in the bodies. Now, what I was looking at is I'm looking at these bodies, and what I do is I just hover the cursor over here, right? Now, as I'm hovering the cursor here, and I hope you guys can see this clearly. Or actually, let me just drop this line, right? Let me make it a bit bigger so you guys can see it as well, right? Now, when I drop that line here, I'm immediately looking left, and I'm saying, okay, what key support resistance flips have we got? How significant has this level been at holding price or rejecting it, right? So here we look across, right? Resistance, 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 support, resistance, flip, acting as support, closed through it, came back to it, retested it, sold off. We can see the clear support that's being provided here and all the way across here as well. And in fact, if we grab this line and we adjust it a little bit by snapping it onto the top of these bodies, right, which for me has the most significance, then we can really, really start to see the accuracy on this, all right? Now, I'm looking here and I'm saying to myself, price has come in and found resistance here. Again, look at this. Big impulse move higher, right? Little bit of time passes. Price retests this area here, purges out lower to take out any stops below here, and then moves higher. So where do we target? Really, really simply, we've got this clean high here, haven't we? Right? Oh, I don't want to click that. We've got this clean high here, yeah? So this is where we're looking to target, and we say to ourselves, okay, we've come down here, this level's holding, yeah? We've had a couple of little body candle closes down there, but nothing like this, right? Nothing like this impulse move higher. So we want to wait for confirmation, yeah? We want to wait for price to come back in. We can see these long downside wicks. These are showing us that there's buyers stepping in here, right? That there's buyers stepping in. This is pushing the market up, okay? And then we see when we get this one, we get this little deviation below this level, this close, again, designed to trap people in, come back, retest, and then we're off. So what can you do to stop yourself getting caught on the wrong side of these? And especially if you want to trade these on the higher time frames, if you get a move straight through and come straight back, yeah, often they're less likely to hold, okay? You get a move up like this, you get a little bit of time, bearing in mind these are 4-hour candles, price meanders back down into here, right? But then you're saying to yourself, well, all right, mate, fine, that's all well and good, but how do you know, why have you not entered on this one? And then you got stopped out down here on this liquidity run, or this one, or this one, or this one, right? So if I'm trading higher time frames, I used to do this pretty much all the time, just trading candles, right? And I'm interested again in the bodies. Now, I'm looking for a couple of things here. I'm looking for either a pin bar candle, or more importantly for me, I'm looking for an engulfing candle, okay? So an engulfing candle, let me mark a few of these up for you. So here we have examples of bullish engulfing candles. All right, let's mark up all the ones that we can see. We don't want to cherry pick, right? So you notice we don't have them in here when we're landing in here, right? We do get this nice pin bar here, but like I said, we want to put a little bit more weight on engulfing candles rather than anything, because that engulfing candle is showing us that the market's getting ready to make a move higher, okay? So if we're looking at this in the most simplistic terms, right, and we say to ourselves, okay, price has had this impulse move through here. Why do we want to see an impulse move and a strong close? Because it's a first kind of sign that the market's ready to make that move, that larger buyers and players have stepped in, right, to to sponsor this move, because you've had this impulse move higher. You've had people closing out positions here because, again, look at this line. This line acting as resistance as it's done and support. This is expected as resistance, right? So people will be putting sell orders here. They get absorbed pretty quickly. We take out key liquidity below this low first, this low, and then this impulse move higher in this big bullish engulfing candle. People will start jumping in here, right? And those people typically get hurt, right? They typically get punished by the market. They get driven down here, stop loss is taken out, price holds this level. And then if we're patient, okay, so fair enough, we get this pin bar candle here, right? So we could drive that, we could drive into the lower time frame, see if we would have got an entry and take a look at what that looks like. And in fact, we'll do that, right? Like I say, don't cherry pick things, guys. You'll only do yourself a disservice. It's no good me sitting here going like, oh, look, two great bullish engulfing candles. Aren't I clever? This broke above this level, retested it. We waited for our bullish engulfing candle, target 1, target 2, job done, right? But it's not true. We've got this bullish engulfing candle here as well, right? You know, and that would have been really misleading. We're holding these beautiful downside wicks, yeah? And then this, and then boom, all right? Looks like this thing's going to take off. We've got some clear upside targets over here, but it doesn't quite take them. Now, what could have helped keep you out of this move is that you didn't get this liquidity run before it, right? See these lows remaining untapped, right? If price had purged down here to take out some of this liquidity, you'd argue that it would have a better chance of fueling itself a move higher, all right? Quick question here from Stefan. Why don't you cover projects like XEN so we know to get in early? Most ETH burn for this project and has Google devs. Really interesting point, mate. Not my bag, I'm afraid. I'm a price action trader, but we have an amazing fundamental team over at the Nest, Julian and Milky, two guys that are just absolutely fantastic at this, and they keep us informed on those type of projects. So I'd get yourself over to the Nest, follow those guys. You can find them on Twitter and on I'm not sure if they're on Thingy actually, but either way, you can definitely find them on Twitter. If you can't find them or you're interested, drop me a line on Twitter later, mate, and I'll give you their handles. But you can also pop yourself on there and get yourself on the newsletter where we do discuss projects like that. However, very, very risky environment, guys, to be investing in anything. It's certainly nothing I'm doing at the moment, not until things settle and we get a better outlook on the macroeconomic environment. But go ahead, go and check out Julian. That's Julian with an X at the beginning, XULIAN, and Milky as well, bud. They'll have some good fundamental drivers for you. So we've come into these areas, right? So the lack of liquidity grab down here makes us think that this engulfing candle here might not be all it's cracked up to be, all right? What we actually find out is, again, we get this purge lower. Why? To take out all this liquidity. Look, this low, these lows here, all taken out, right? Then, when we get this impulse move back above this level, look how aggressive that move is. Again, we're not looking to get in here. We've got this inefficiency here, right? We expect this to be filled. Now we're saying to ourselves, fine, if price is going to come back down to this area, right, and we're going to look to get a retest of this, then we can also be up here, right? And then we can look to get entries here if we see this hold. And again, look at this, beautiful retest, holds this perfectly. We get a similar situation here, support, purges through, right? Now, you can be very aggressive and trade these immediate retests here, but actually, you're normally better off waiting for price to come into these areas, right? Wait for price to establish itself, and then you can trade these further down. In this case, either into order blocks, or as we saw, with a bit of patience, you'd have to hold this for a while, but we do take out these lows as we come back down here. So that's why that line is on my chart, guys, there, all right? Now, just very quickly, for people that are asking about entries, let's just take a look at, let's just get this whole level in here, right? Let's just drop this down to a 5-minute quickly. So we know where our arrows are, right? So our arrows are signifying that these are key areas of interest. This is where we've got our higher time frame engulfing candles, yeah? So what do our entries look like? Really, really simply, here we go, start with the first one. What do we want to see? So we want to see a liquidity grab, yeah? That's a purge of the lows like we get here. Price comes down, takes out the low, right? Then we're looking for a market structure shift. So highs to be broken. In this case, you see we set this high here. We come down. When this high is broken here, Made that a bit thicker so that stands out for you guys. When this line is broken here, yeah, all we're simply doing then is we're waiting for a close above, price to come back, yeah, and retest this area, which I call just a name that I made up, but I call it a breaker line. Find it helps kind of, when you're discussing this with people, we've kind of broken the structure to the upside. We're now looking for a retest of this. Or one of my favorite entry techniques is entering in the fair value gap here, right? So the fair value gap, the inefficiency here shows us that price is impulsively moving higher, right? So there's no orders in here. That's why it's just shot up. Then we look to get a retest of this and we put our stop loss underneath the origin of the fair value gap. Now, where do we target? Really, really simply for me, we're looking for these key highs, all right? So if we're in a trade down here, get our long position out, this is where we get our close, price retraces and takes us on the next 5-minute candle. Our stop goes below this, a pip or two below that. And then the key one for me would be this here, right? So this high. Now we've got these highs as well that we want to be aware of. So what's this? We got a 1.68. You want at least a 1.5 to 2R. All right. You can't dark mode, please. Hard to see in the white screen. Yeah, sorry, buddy. I don't like using the dark screens. I find it just sits a lot cleaner across here as well. I think actually with the white screens as well, it for me personally, I read a lot of posts from psychologists and stuff, people saying that, red and green are big triggers with the mind, right? So red and green candles. Also with black being quite dark, it can feel a little bit enclosing. So I've always found that moving from white charts, in terms of showcasing the stuff, it looks very clean. But it also kind of, from my perspective, I think it helps kind of psychologically as well when you're looking at them. So, apologies for that, bud, but it's, I can't accommodate that at the moment. Right, Carlo, can you show us the highs and lows on Cardano? Yeah, ADA, sure. Just give me a shout at the end of that. And Alexandra K, Happy New Year to you too, bud. Did you take a look at XTZ USDT? Yeah, sure. So let's do a couple of... let's do a couple of those towards the end. And just for the person that was asking about this indicator here, no affiliation with them at all. But this is ICT Kill Zones by a chap called The Tradinator. Seems like a really solid guy or girl, good trader, and makes really, really sick indicators. This basically, you can find it by typing in ICT Kill Zones and then Tradinator, right? Is written in brackets afterwards, and if you go on the guy's profile, it is a picture of the Terminator, which is pretty cool. So 5-minute entry here, humble day trade up here into this level, right? Now, if we run along here to our next one, we can see same principle here, right? What are we looking for? We just discussed it, yeah? We're looking for lows to be taken out. We get the sweep of these lows here, right? We then want to break in market structure, which we get here, right? Price doesn't return to our level here, all right? We come along here, right? Actually, change that by mistake. It's already on the breaker line. So we look at that, impulse move through, price doesn't come back down to retest this. Now, if I've got a really clear price target, right, and I'm thinking that price is going to run, then if it comes within a level like this, I will wait for a high. I'll wait for the pullback, right? Now, something we should see respected here is this down close candle, okay? So this should be acting like support if our theory is correct that price is bullish, all right? So when we get the close up here and we come back down, you could enter on this. You could take an aggressive entry on this to look to trade it higher, or you could wait for the formation of the bullish engulfing candle. All right, so this will act as support here as price then moves up further. You'd also get another chance. You see how it wicks into this area here again, confirming it as support. But like always, we don't always get these fills, right? I would have been waiting for a retrace into the fair value gap here or a retest of this breaker line, which we don't get, right? So you're not always going to get them. However, if you trade them often enough and you've got enough consistency within the strategy, then it will pay off over time, all right? And then to do the last one here, we can see, just to lay this up, this is our sweep, right? So price comes down, takes this out. Now, here's the high. Realistically, we could call it probably in here. You get the low, high. You'd want to see some wicks on these candles, right? Price closes above. We'd be looking for our entry here. You probably have just snuck in on the breaker line retest. You wouldn't have got the pullback to the fair value gap, all right? So I hope that kind of makes sense in terms of looking that out, guys. White screen sucks. Sorry, guys. I've never had so much hatred towards the white screens before on a stream, to be honest. I've always been a big fan of the white screen, but yeah, apologies if it's something making you guys uncomfortable. It's just how I like to see the charts, and I think it also looks really clean. So, where are we at the moment? Now, the reason I'm not looking actively to trade Bitcoin at the moment is because, in truth, I'm just really not sure. Right, but we've taken out this high here. The market's shown a lot of weakness. I do feel like we can push higher, stuck in line with our daily bias. I'd probably be looking for consolidation on the lower time frames within this area here, right? We'd want to see this. This is obviously our 4-hour fair value gap. We expect price to come back down. I think if we started coming into here, this would give me a lot more confidence if we were holding this. Yeah. So price is kind of coming into this area here. If we got something like this, maybe, yeah, then I think we could look for entries around here. Yeah, we obviously want to be aware that we've got relative equal highs here in this key level. But I think if we're really going to take a dip and take a smash at these, then it's going to be coming up to take a play on these daily levels here. All right, guys. So let's not do ES today then. If I know we covered that on Monday, people seem to be a bit more interested in some altcoins. So let's take a look at those, shall we? Tammy, white screen is fine. Legends, thank you. Right, okay. So. No, GB, I know you're joking, brother or sister. It is all good. I appreciate those. Some of you watching this at night, it's not ideal. So cool. All right. So what ones do we have? I remember, I think Carlo was asking for ADA. And then, yeah, XTZ, wasn't it? Okay, so let's take a look at ADA. Here we go. Nice, clean chart. So let's do a nice top down, shall we? All right. And then we'll do this one. And then we'll take a look as well. This is one ugly looking chart, isn't it? Holy wow. Right. So that's the one. Cardano said good man. Okay, so you want a really ugly chart. This is real ugly. All right. This is the point at which people were thinking we're surely not going to bomb out below this. And then we absolutely bombed out below this, right? So this interests me straight away, right? This extreme here. Now, I'm also going to be interested and looking again, like I said to you guys before, at bodies and kind of lining these things up and saying like, okay, well, do we have any confluence here? We getting these SR flips, a little bit gritty for me, a little bit too much there. I like this level, right? Because you can see we've come in, found key support here, purged, test, sold off from here, deviated, right, above, generated liquidity, come back below, retested it and sold off. And it's just going lower and lower, isn't it? So what does it tell us? Right, it tells us at the moment, one good thing that we can see is we've kind of swept some... Oh, no, hit me space bar. Hang on, I'll always do this. So we've hit some liquidity. Here we go. So, yeah, we've run some liquidity on the lows, which is of interest. So let's mark that in. So we've taken out that, and again, you can see really nice and clean here, actually, how it comes back down into this area. We've come out, taken that liquidity, closed back above, expansion higher. Where's our first target when we're looking for expansion higher? We're looking at prior days high, or in this case, prior weeks high. And then we've got, obviously, a clear high above here. The other thing that I'd be looking at here as well is this weekly fair value gap. All right. Typically mark these in grey. Hope you guys can see that clearly. Right. So on a weekly scale, really, this is what it's telling us, yeah, as we're pushing up into this point. So, I mean, it's pretty ugly at the moment, guys. So let's move to the daily. Oh, just got a couple of quick questions. Frizzlot, speaking as a devil's advocate, you maybe switch to white chart. Colours and shapes areas are much cleaner on the white background. Awesome. Yeah, I find that. And I read a lot of really interesting psychology articles, actually, about black charts feeling a little bit encroaching on your mindset. And also red candles, red triggers us as people. It's used incredibly well in films and bits and pieces like that as well to trigger emotions. So I find it just, a little bit more neutral, but I think it's horses for courses, as we would say here. Mr. Brownbug, DXY should go higher if not going to the lower support 101.2. Yeah, DXY in a very interesting place at the moment. And as we know, if that starts to run hot, risk assets normally get pummeled. So let's have a look. So, hi BC, quick one please. I personally use some MA to find points of exit. Is it something you eventually do? It seems like you never use MA. What do you mean by MA, bud? Pop that in there for me, and then I'll let you know I'm either having a really blonde day or I've really missed something there. So just quickly then, and yeah, Dan, we'll take a quick look at XRP as well. We'll just do a very quick top down on this, and then XTZ I think was another one. So weekly levels, high and low, right? Again, we see the fair value gap drawing price was at MA. Sorry, mate. Yeah, I've been a right div there. No, I used to. I had some brilliant strategies based around moving averages. Not something I use a lot, but something I do keep a keen interest in that I will look at. I often keep the daily 20 and daily 50 on the chart. So I keep that and I use that on the lower time frame charts just to give me a guide, especially in crypto, of more of kind of the higher time frame structure of whether we're under bearish pressure, bullish pressure, or whether we can expect some kind of mean reversion towards it. So definitely really good strategy. I think a lot of my early stuff on YouTube, actually, I cover that a lot as well. But just to do it without going away from it too quickly, right? If we get a moving average, right? You click on this bad boy. If it ever lets me. There we go. So if you take it away from chart, yeah, and you just put it on daily, I normally get a bit funky with it as well. I'm not going to lie, but I won't bother now just to save time, right? But if you do that and you move that on daily, obviously daily it represents the daily there. But as you go on to the 4 hour, yeah, you can see it's still set to our daily, right? Daily. If we now move this to chart, it moves to represent the time frame that you're on. So what I typically do with that is I have that on a daily, right? And then I get a little bit funky with the style and I put it on lines with breaks. Make that a little bit fatter so that we can see it. All right. And then whatever time frame you're on, when you're cycling through the time frames, you can see here and you're saying to yourself, okay, look, deviation above this, purge below it, looking to trade it down. Here you can see how we're holding the moving average on here at the moment as well, right? So that's definitely something to consider, and especially if you've got any kind of issues with market structure or anything that's any kind of is coming across unclear. So, and yeah, Alexander, don't you worry, buddy. I've got your back. Not forgotten XTZ. So weekly levels are here. Daily, what is daily telling us? Well, actually, daily was just telling us that we've deviated this level here. We've closed back within it. What we want to see from our daily candles is we want to see them open, trade down, and then expand higher, taking out this higher. This day did the opposite, traded up, came back down, right? So didn't give us entries. But this day here, we can see trades lower, and then it pushes higher, all right? So on a daily scale, our levels are pretty much what these are. When we had this deviation down here, we would have been aware of this inefficiency, which is drawing the market higher. But typically, it's the liquidity sat above this level here, all right? So there's nothing really much more to kind of annotate here on a daily scale. We've left resting liquidity below here. We've taken out these highs. The expectation would have been to kind of take this out here, right? So as we then move down onto the 4 hour and we've got our session breaks here, all right, something actually just cover with you guys in a bit more detail, because I know I say this a lot and I often get questions about it. So if we're bullish from here, right, price comes back in and price gets itself back in the range here, right? We get back in the range here, Saturday. I don't typically trade weekends, but either way, right, we look at the key low before we get back in the range, right? What are we then waiting for? So we're saying to ourselves, okay, we're bullish here because we believe that this is going to be attacked, that liquidity is now going to be attacked because we've run the liquidity lower. Price is back in this range. Why is it back in the range if it doesn't intend on going higher? You need to go and check out Trader Dank for that and watch his video about Johnny and the pizza. I can't even tell you because it's just, you'll just laugh yourself after death, but do go and please watch that, right? Now, When we come here, fine, we dip back out of the range here, right? So then we're in Sunny thinking like, oh, okay, well, actually, is that a bad thing? Well, no, actually, because a lot of the times, if you speak to a lot of old prop traders and a lot of people who used to work on the floor, they'll scream at you. And I read this in Dante's, one of Dante's threads recently as well that really made me laugh because it's something that a lot of old friends told me as well. You know, they're literally shouting your face with obscenity if you're looking to, you know, buy green candles. You should be selling green candles, buying red candles, which is an old adage, right? So for me, what am I looking for? And I'm very much based around timings with these as well. So unless I see something really obvious outside of the timings, which means I want to trade between London open, including the New York session, and then London close, occasionally New York PM, but a lot less often because I, you know, get down to the markets ready for 7 for London, gives myself a bit of prep time, get a kind of feel on things before we get the open. So before I digress too much, come out of this range. This has shown us here, right, the price is ready to come back into the range, right? This was our high time frame close back in this level. So what we want to see from our bullish days is we want to see price trade down. Yeah, so it opens here, trades down, okay? Doesn't take out any key liquidity though. If we'd taken out this low, I would have been looking for an entry, but we didn't. Instead, what we've done, and you'll notice these entry techniques are always the same, right? So we're looking for a run on liquidity. Price runs liquidity in our London session. Where's the high that runs the low? Here. This will just give you a really nice, simple 15-minute entry, right? You can put your stop below this low, right? Below the liquidity line here. Or if you're really conservative, below the key low down there. And then what you've just got a really simple case. You're saying to yourself, fine, we wait for the close above that. Remember, see, this candle has to close. We get our immediate retest here. Let's say you were going for the most conservative and you're saying, you know what, markets have been very choppy at the moment. I really just want to make sure I'm protected here. Well, where's our key target? We've got a lovely clean target here, right? So just be humble, nip it just underneath it so you make sure you get your fills. You got a 2-to-1 trade there, right? Once you get to that target, I typically favor cashing out quite heavily at a set target, so I'm not taking too many partials on the way up and diluting the position. Often when you're trading, you're day trading and you're trading huge position sizes or large position sizes, you can just end up losing most, if not all, to fees, right? So make sure you program that in. Now, when you come into here, we know we've got extended targets over here, so we just cash out quite heavily here. We leave some within the trade. I flip my stops to entry here only once I've hit that target, right? Not if I've hit partials. Stops to entry here, and then you can get situations where you get a lovely run like this. Because again, remember that our theory is, right, that we are actually going to make an attack on liquidity resting above here. So as we come up, right, if we hold this trade enough, then it becomes an 11R trade, right? So as long as you've got a percentage still in the game here, it allows you to stay in the game, right? Now, similar situation here. What have we got? We come into this day. What do we get between London and New York? What do we want to see? We want to see price trade down before moving up. The problem that we've had on this day is we've had this big expansive move higher. We've taken out key liquidity from the prior day. It's not smart to enter at these points when we've had such a big move. What we want to see is on a day like this where price opens, it's dropping lower, right? Again, what are we looking for? So what makes us get in here and not here, right? Because we've taken out lows, right? We've taken out lows below here. Let's mark this one up, for example. We've got our sweep, right? Perfectly valid. But what don't we have? Don't have a close above the high that sweeps the low, right? And if you were being really aggressive or entering this on a lower time frame, maybe you entered here, right? And you get stopped out. So you've got a 1R loss there, right? However, you shouldn't be discouraged with the idea. Look, we get this purge late, right? Late in the London close, before we're heading into the New York session. What does it do? Takes out, that's a rubbish line, takes out the liquidity below these lows, right? Perfect. So here's our sweep, right? Now we're saying to ourselves, okay, where's the origin of that move? Yeah, it's here. So price comes down, takes out liquidity of the lows, right? Now we're saying to ourselves, okay, well, if we were entering on here, this would be our liquidity line, right? But we don't. Look what we get here. Let me just delete this quickly. We now get a second purge lower, right? To take out the liquidity below these lows. Now, you see how that does that? See those upside wicks and all of those bodies closing above this level. right? That's showing us that this thing's ready to move. So we've got our level here. We set our breaker line. We get our close above. Price retests it. Like we said before, we take our long position out. We get it on the retest, which is actually the next candle. It's not always the next candle, but it is in this state. Underneath the swing low here, or super conservative below this one, right? We know we've got a cluster of liquidity sitting above here, so we want to make up for the fact that if we got this wrong and we reverse, we're able to get out just a scratch or maybe even at break even or with a tiny bit of profit. But realistically, we're going to be looking at this first. But obviously, as you're monitoring this trade, it's one of those beautiful ones that just takes off so aggressively, you don't even have to think about cashing it out, right? You're not breaking structure at any point here. You run this all the way to the top. Lovely. All right. So, hope that makes sense. Now, before I waffle on too much, let's smash out. We've got 4 minutes left in the stream. Not that that's an exact. I hope this covered ADA, by the way, Carlo, in terms of that, mate. But this is what I'd be looking at the moment, really, is what's confined within here. In terms of any kind of bullishness, I do think price could get drawn up here if we continue kind of a bit more of a with a bit more bullish kind of pressure, especially if we start to see DXY pulling back and Bitcoin ranges, maybe we get a few of these little bits start to pop off. What I would say about this is every man and their dog is and woman is going to be bearish on this at the moment, right? Which is normally a good reason to expect a little bit of a pop. But we've got these key levels, super safe, weekly close above here, expect to push up into these lows, right? But again, if we take this on a daily scale as well, which I'd be really interested in, I'd want to see price just closing above this. All right, mate. A diarrhea chart for Cardano, but thank you for the strategy. Oh, you're very welcome, mate. Very kind of you. Right, so XTZ for Alexandra. Yeah, let's take a look at this. Boom. So where are we? Weekly. Let's see where we are. A lot of these altcoin charts are going to look very similar to this. Hey, that worked out, didn't it? God, how long ago was I back in? When was that? Back in July. Right. So again, you can see same principles here. Highs and lows, right? Highs getting taken out, lows getting left until you come down, take these sweeps and generate more liquidity to the upside. So let's just hide or possibly even delete all of that. Let's keep it on there. Right, so same principle, guys, right? I'm looking for extremes that we've got down here. We can see what was a telltale sign about this is we got this huge impulse move through it, yeah? We didn't actually get the retest. You know, you'd want to see price come back, a little bit of time to retest that area. Just gave us the weakness in these dojis and then really just absolutely took off lower, didn't it? So on a weekly scale, what are we looking at the moment? That level was certainly of interest. I'm being interested to see what happens when price returns there. We've got this huge inefficiency here, fair value gap that could be drawing price higher. Where are our key highs and our key lows? Well, until this candle closes, if that candle closes as it is, yeah, then that's our weekly swing low, right? Which is always of interest. Now, in terms of highs, yeah, we obviously want to be aware of these weekly highs and lows. But if we're looking at, you know, which we'll look at on the daily scale, so let's mark these in. Just gives us an idea when we drop down to these lower time frames, guys, right? We know we've got the inefficiency here, but the real key one that we're interested in here is this swing high, right? And you can see how much this has got to get through to get up there. Now, this will be drawing price higher, right? Inefficiencies love to get filled, but as you can see very clearly, this inefficiency filled, this inefficiency filled, this inefficiency not filled, right? So at some point, I do expect us to get a move up higher, all right? So we're in here. That's what we gleaned from the weekly chart. What have we got on a daily scale? The last key move that we had on a daily scale was to take liquidity from the lows, which we can see here. So we'll mark that up in blue. So we can see we've swept the lows here. Price has continued on its way up. Took out this short-term low that was formed here. So it swept liquidity there as well. What has it done? Moved to fill this inefficiency, which is why I'd be a little cautious at the moment. Right, here we've got our fill. Now, we could come up to attack the highs here, right? But realistically, you know, that's a weekly high, right? This is our swing high, right? So that's what I think we'd be looking at here in terms of a daily level. I would be aware of this. There's almost certainly some orders sat in here, right? Make that purple. Why? Because we've got the orders that are sat in here. Price moves away from here. We leave this inefficiency afterwards. So again, another thing that we want to be aware of, that price could move up to fill here. Right, so we've got these two prices continuing to move up. My feeling on this, right, as always, is that price is seeking liquidity higher up, right? Something else actually that I've been remiss to not mention in more detail with you guys is Fibonacci as well. If we take the high to the bottom of the range, or of the move, sorry, then you'll notice that we're coming into the 618 here, right? This is a key reversal point for price. If it's coming down, offload into this area, right? Obviously, a lot of people going long here, and we could see a reversal. Now, we need to take that into account. We need confluence with that as well, right? But it's something that we always want to be aware of. All right. So daily wise, we can see price getting drawn higher here. Now we see the reaction we've had as we've come into this inefficiency here, right? So let's drop down onto a lower time frame. Let's pop down onto a 4 hour here. What have we got? Price coming up. We can see this kind of reaction we get here, but not too dissimilar to what we saw here, right? If we zoom in a little bit, we can see as price came into this level, we've taken out some key highs over here. Then we get this wick above. Price comes back down, doesn't take out the prior day's low. Still showing a lot of bullishness. Difficult to fade this at the moment, right? Something else we want to take into consideration here as well is this. We would expect this to offer some kind of resistance here. Pop that in there. Because what you want to see when the market is closing down, and this is what ICT teaches as well. And again, I'm not here to teach ICT concept, guys. If, like I say, been a really, really big part of how I've learned as a trader. But if you want to go and if learning, you should learn from the man himself. You know, he's the guy that knows this stuff better than anyone. I teach a much broader range of trading as well, but very much respect his concepts. But one thing I found very, very useful in my trading over the years, we look at something like this, right, is price comes across here. We want to see these up closed candles respected, right? So what we mean by that is, even if we allow for the whole candle here, right? What you notice is price breaks down, right? It respects this up closed candle when it returns there, right? Price comes into it almost perfectly to the body and then completely sells off, right? In the same vein, when we move these around, yeah, and then we're saying to ourselves, okay, these are now our up closed candles. It can help us determine when we get these support and resistance flips and see how price moves through that quite easily, comes back to retest the equilibrium before moving off higher, all right? And then what you're doing in these instances is you're then using the down close candles, right? So we expect the down close candles to be respected here. And whether you're allowing for the body, the wicks, again, it's something you've got to make your mind up for. You've got to test or watch ICT's concepts on it and then make of it what you will. But as we get these coming up here, this is what we're testing. So now we're saying to ourselves, okay, is this going to act as support here? Notice how when this came up, we get this nice volume close here. Price is now moving up to this level. So I'm interested in this fair value gap, but I think we're going to make an attack on the liquidity higher up if we're certainly going to make a move above this. You know, we haven't closed above this yet, but if we get a strong close here, we could look to scalp this level, say, knowing that we've got liquidity higher up. All right. But what I would very much be looking for when we get to these levels here are potential reversals, right? And remembering that what we'd be looking for, let's say that we get it in this area, we would be looking for a move in, a liquidity sweep, and then once we break back down, we don't want to rush into this impulse move lower. We want to see the sweep of this high and taking out this key level. When price purges below and we get a good close, we look for a retest of our breaker line, right? And then we're just hunting our key lows below. And realistically, this down here is where the liquidity is sat. All right, so I hope that's been interesting for you guys on XTZ. And then we said we'd do one more, didn't we? What was it? Danny Boy asked for up here. XRP. Cool. Let's take a quick look at XRP as well. Also, guys, just quickly before we jump into XRP, let's just take a very quick look at the DXY. The old squiggle line worked a treat, right? Came down, took liquidity, running into here, people getting really bullish. We've got this reaction off this line. We came up Y to take out the liquidity above these highs. This is just a squiggle line we drew at the time. When did we do this? This was from Monday stream. So if we've taken liquidity from the high, where do we now expect it to go? We expect it to come back down to the lows. Now, does it have to? No, it doesn't have to. Again, we want to be aware of like our Fibonacci's here as well. This is going to be our kind of 618 region when we take this low to this high. Okay, we can see we've come through that and we're holding that at the moment. We've also come down and really nicely filled this inefficiency here, right? And we could be coming into orders that are resting in here, all right? But for me, I would still expect price to come down a little bit lower and test some of the key liquidity. But what we see here on this candle, this pin bar type candle, is that actually there's been, quite a lot of pressure coming in here. So that's pushing the market up. As that goes up, we would expect corrective moves on risk assets, especially beta risk assets like Bitcoin. All right. Burned. Okay, yeah, really good question. So the Bird Nest BC, as an ICT student, as a daily open you use, or you look at the New York midnight price? No, I use daily open. I've always traded daily open. Like I say, I'm not a purist of ICT's teachings, and not to say that I don't think people that do it. I know some amazing traders that trade his ways, and I completely believe the guy. He's got something very, very special that he's doing. I just see the market slightly differently, and I also like to have kind of a broader view of stuff. I've made money over the years, and I became a professional trader without sticking to those concepts. I've used moving averages. I use a lot of range trading, mean reversion bits and pieces like that. So I know those things can work. So I'd never want to discount them. But I think what his study and his particular views are very exceptional. But no, I don't use midnight open. For me, I'm using the daily open, but I use my kill zones to make sure I'm operating within the right time zones. So that's DXY. And then we are looking for, by the way, huge thank you, people like Green Star, Imran Khan, everyone that's popping some bits and pieces in the comments. I'm really sorry if I'm not getting around to everyone. If you've got any other questions, do please repost them. I'll ask them. We won't do any more chart requests at the moment because we've overrun this one a little bit, and it was XRP, wasn't it, Dan? There we go. Let's have a look at this one. So XRP, here we go. So again, weekly. Oh, you're welcome, Bern. You're welcome, mate. So let us take a look at this. Be interesting to see these annotations down here and if that holds any weight still. So this looks a lot healthier to me, right? Look at the other charts that we've had. You're basically just in this huge downward spiral. At least over here, when we look left, we can say to ourselves, okay, well, what's holding up price here? Yeah. Now, on a weekly scale, what I really like about this, right, is we've got these relative equal lows here, which we've just taken out, right? So let's mark this up in our red, right? Where's our key sell side? Below that, it's going to be down. Well, we took that out as well, right? So now our sell side liquidity is just this. In terms of our highs that we would be aiming for, high of this candle was 39.67, 39.60. Okay, so this was 39.61, sorry, and 67. Okay, so that was slightly higher. So actually, we've got a key area of interest there, right? We were looking at this inefficiency here for price to come up into, which it did. All right, and now it's come back down. I mean, not really the time to short this down here, as we'll see as we move down to the daily as well. So, quick question. D Just Rob. Looked like a head and shoulders to me, doesn't it? Oh, okay, mate. Did you mean this one on a weekly, mate? I don't actually trade head and shoulders patterns, but yeah, dear God, doesn't it just? Right, so what Rob's pointing out to here, absolutely rightly so, if you trade these kind of patterns, is that this very, 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 very much looks like a head and shoulders pattern. Normally what you would get here is you would look for price to run a little bit lower, retest this, that's the bottom of the shoulder, and then really look to sell off. That does look really clean. I don't trade those patterns. If you do, and interesting stuff like that, Axel Kaibar is fantastic for that. CMT, fellow CMT along with Bird, and you've got an unbelievable understanding of that. But really, really good spot. That does look like a head and shoulders pattern. So we see we got price pull up. We didn't get much of a purge into here before price started to then break down again. We can see we're taking out these key lows as we go lower. I mean, look at this reaction on this candle. Right, that's a lot of buyers down here on XRP. So this is Ripple, right? So this is all going to be aligned with the court case, right? With the court case that's going on. So I think people may be expecting some bullish news on this. Either that, or we've just come into a really key area of buyers down here, because that's really, really popped. That's really popped, right? Look at the size of that wick. That's price trying to get all the way down here and has found some really aggressive buying stepping in. So okay, again. What are we looking for? Key things here. We've obviously had a real low sweep. We've had this sweep on our daily scale. Price moved up into this inefficiency here. Didn't quite fill it completely. So there could be a chance that we're looking at that. So let's mark that up and say to ourselves, okay, that is our, leave it here. And then we've got our FVG daily fulfill. All right, let's take this, make this black and a little bit thinner. We go. So we could be seeing price come on to completely close that inefficiency off, but also as well, actually make that a little bit longer. We've also got that there, right? So when we're looking at key highs and lows, right, on a daily scale now, we've got a key swing high here. So let's get that back in our daily color. So as we look, we could be saying, okay, we've had this, we've closed back in this range. For me, I'm seeing more of an attack on the upside than I am on the downside here. We're going into the 4 hour. What else is this telling us? Right, 4 hour, this is really crucial, right? And this is why it's important, certainly for me and my strategy, that I'm cycling down through the different time frames, right? Because look at this. We've had this nice full fill of this now, right? So what would I be thinking here? We've got another inefficiency here. I think I would want to see price hold here, right? Take out these. I think we either move up from here. There's a very small inefficiency here that price is drawing into. Maybe we purge below that, get something like this, in which case I'd be convinced holding this level here above this fair value gap that price could quite easily move up here to this liquidity. I think if we start to see a breakdown here, so the opposite, if we get a run of these highs, price purges back down below, I would then actually be looking to favour this to the downside, scalping or day trading, if you like, into that level there, certainly. Now we're on the 4 hour. I wonder what did happen when we annotated this last time. Yeah, so similar case, guys. We can see took liquidity here, came back up to the highs. When we wiped out these equal lows, we set this low, we took this low, we traded it into this high here, all right? Took out this high and reversed, left this high here, which again, price came out, took out the lows from here, traded up into these highs before fueling a really aggressive move to the downside. This inefficiency here that was left is what's drawn the price up here, which falls in line with our daily as well. And then this is where we've got our reversal, which we'd look at on, say, a 15-minute. We'd be looking for that breakdown pattern and then price to trade lower. However, at the moment, like we said, we've not really got much clarity here other than the fact that if we're looking at this as a range, we're kind of stuck in this mid-range area here, all right? We want to be pulling back into here. This long wick gives us a very, very big range. So we'd want to consider the bodies from here to here. We'd want to be favouring longs from down here and shorts from up here, right? So There's a slightly higher risk trade if we get up to here, but we would look to scalp this on the very low time frames, all right? What do we expect from the market in terms of above the daily time frame, for example, BTC, SPX, DXY? So terms above the daily time frame, well, it's very, very tricky at the moment, mate. So hopefully, Dan, I hope that clears things up there on XRP. If we continue with the bullish pressure, then I expect these all to have a little bit of a run and to start taking these out. Or for BTC, if we start kind of trading sideways, then we often see them get a little bit of a pop as well. But obviously, we do want to be aware of DXY. You know, this is a really, really key level for me. Right, we've deviated this twice and seen pumps come back up. Isn't really showing a massive willingness to get back down here. But we have got a monthly order block down here, which is what was making me think that we could be drawn down into this before moves higher. But what you can see at the moment is how price is just going from highs to lows, right? Taking out liquidity, high, take the high, come to the low. This low here gets taken out. This low here gets taken out. Price is ready to search liquidity higher. We target this first and then this first before we move on. All right. Now, something else I just want to show you guys. So I get a lot of questions about this in terms of ranges, right? So for ranges, if I'm looking to play these, I like to kind of combine them. And we can see here on Bitcoin at the moment, finding support at this level or around this level we marked out earlier. So maybe we do see a little bit of bullish continuation. This is just a little bit of a pullback. But I saw this earlier and someone sent me this really cool video from this trader called George. It turns out we've got really, really similar principles on setting out ranges. So if you get, really can't remember. He seemed a really solid guy, Dutch guy, I believe. He's got a picture of looks like a Napoleonic type era person in one of those crazy hats in black and white. But I think it's George. But anyway, similar kind of principles, right? If you're looking for ranges to establish, especially things like bull flags, bear flags, bits and pieces like that, they're very, very tradable. So what do I mean by that? Well, what you're looking for is an impulse move like this. You see, we've got this impulse move from the lows. That's clearly an impulsive move higher. We've taken out these highs, right? So all I do, and it seems really, really simple, but I take this high from when price lands, right? So when it closes, we then need a clear low, right? So, I'm talking about a clear swing low. So we're looking at this swing low here, right? Let me just extend this out a little bit. And now I'm going to change this to, here we go. So if we're looking at this, let me just hide some of this stuff, clean this up for us quickly. Right, so what we've done is we found our impulse move higher, right? And then we've set this higher. Yeah, price has then retraced, and we set this low. What we're looking for here is just deviations of this level, right? So range high, we see we get the deviation here. What happens? Price then retraces looking for liquidity via the midline or the EQ down to the low. What do we get here? Deviation of this level, price comes back within, attacks the highs almost to the dollar, right? So if you're looking for those on your charts, and obviously you drop down into your lower time frames as well. We're all George. Brilliant. Green Star, are you a Dutchie as well, are you, mate? Then you can look at these. Trading the range. George Crypto is his name. Awesome. Again, I trade ranges a number of different ways, right? Just someone sent me this recently. I saw this. I was like, amazing. Made me feel a little bit less of a mentalist. It's not really a way that I'd seen of setting ranges before. A lot of people are waiting for your 3 touches, right? But I quite like to trade them quite aggressively, and I found that ones that come after impulse moves into those consolidations can be really good, because also when you then get a breakout of those, right? And let me just group these bits quickly. Obviously not like that. That'll do. Right, so then when you get breakouts of these ranges as well, then you get to a point that you're often getting these retests. Yeah, so even if we drag this along here, obviously stay true to our highs and lows. Fine, this is our deviation, right? And on a lower time frame, we look for the structure build and then trading that higher. Yeah, but look how you see that gap. See how we've got space, right? There's space between that. Not tons, but 1, 2, 3, 4, 5 candles before it returns. Now you see this move here, right? See how it's only 1, 2, or the third candle returns to this area here. That then doesn't convince me necessarily that price is that. For those type of sharper moves, you're almost in a structure, right? So you're lower low, lower high, lower low. You're looking to attack liquidity, right? We can see the buy side gets attacked here, the sell side gets attacked here. But then we can see as we come back into this big candle here, this sells off, right? This is telling us here that the move is getting ready to be made, right? Now, even if it takes a long time, you come back to this range point here, you get trade opportunities here. Why? Because people typically leave sell orders on there because they can see that it's acted as that. They can see previously it's acted as support, deviation, price sells up. So naturally, when price closes below, it comes back and retests it, fails, comes back lower again, takes out liquidity and purges lower. There's an expectation there's going to be at least some sell orders left in there as well. But absolutely, Trading the Range by George Crypto. I saw this guy and found him really, really interesting. So again, no affiliation, never even engaged with the guy, but I just thought it was just a really, really good take on that. So yeah, I hope that's been useful, guys. I just wanted to introduce that to you because I know I came to not prominence, but a lot of people know me for range trading and that, right? But I really do try and teach kind of more of a kind of just a range of things, really, because people take certain trading things and find them very confusing. Other people find things with a real great amount of clarity. So hopefully it's the latter. Carlo, can I ask a reflection? What altcoins are you going to lock in for buying when capitulation is done? Do you know what? I'm awful with stuff like this, mate. I really didn't make much. I've never really made much of my money investing, actually, and I should have done. I completely refer to our fundamental team, and then I do my own research on it. But yeah, in fact, do you know what? Actually, just you want to follow these guys, right? You want to get yourself over to the bird nest, right? And you want to follow Julian and Milky, all right? And I think Milky's is like the Milky Bar Kid or something, but you can find them if you go on my Twitter profile, right? Anyone that doesn't have it, you go on my Twitter, you can find people that I follow, right? There's not many of them you can cycle through. Look for Julian. I think his handle is King Julian Am I think. And he's got some brilliant stuff on that, some amazing stuff and thoughts on alts and bits and pieces. And I'll very much be getting my head into those. But I do think that we've got, unfortunately, a fair bit more downside to go on there. But you are the best. Thank you, mate. I'm definitely not the best. There are some amazing traders out there for me, but we do get by, and I'm very fortunate to have the traders and the team that I've got around me at the nest as well. But very kind of you to say. So just looking at this at the moment, right, and you're looking at this, you can see these down legs here, right, as price starts to come back down and purge. You can find mini tradable ranges within those as well. However, what I would always say, so for example, see this big drop here? Yeah, we get this impulse drop down here. Very simple to just, you take the low. Yeah, you then find the first high. So simple, right? Up here, high is set, deviates the low, closes back within, trades to the high. Deviates the high, comes back to the low. What happens? We get the drop down here, but we don't get that space, 3 candles. You know, what you want to see is more something like this. Now, I know this one failed, right? But this is exactly why I'm showing it to you. But I would still stick with this. I'd want to see a little bit more space as price then returns. And again, you see this big purge up here. That is purely designed to knock out all the liquidity here as we then come back into this space. However, the reason it doesn't always pay to trade ranges like this is just the size of them. You know, it's barely 1% side to side. So if you're trading on the 50%, you're looking at a 0.5. You just need very big position sizes as well. All right. Look, guys, I know it's been a fucking long stream. It's been almost an hour and a half, pardon my French. But I hope you guys have found it educational. I wanted to wrap in some of my thoughts on range trading, a little bit what we're looking at the weekly. And also, I know I haven't done some more requests for a while, which you guys like. So thank you to absolutely everyone. I mean, Green Star, Carlo, bloody hell, I mean, with so many legends on here as well today. Burn, Mrs. Brownbug, Mr. Brownbug, sorry. Just Rob, Burn, Jeff, I Am Game, where's Imran Khan? I know he's on there. Alexandra as well, Tino, Dan, Everyone, really, really sorry if I've left any of you out. Tammy as well, I know was on here earlier too. Just thank you so much. Really do appreciate the time you guys give up. I hope you found it of use. Do come and grab me over at the Nest. If you guys are interested in trading with me, you can find a link to trade with me at Bybit, and you get some good sign-up rewards as well. And if you're interested in the Nest, you can find a free trial membership down there as well, and come and be part of a really good community. And just find out if it's for you guys. If it's something that's not for you, no problem. It's not going to be for everyone, but if it is, I'd always recommend giving it a try. And if you can try it for free, then absolutely, why not? All right. So look, wishing you all a fantastic week, all right, and an even better weekend. I am going to be catching you guys on Monday for the live show. But if you need anything in the interim, come and grab me over at the Nest, out on Twitter as well. Have a fantastic week, everyone. Loads of love.